set. Very good. The host tells us we're all set, so we'll call the meeting to order. Roll call.
Okay, Sherry Boyer,
Present.
James Ellis,
Here.
Stephen Ehrman,
Here.
Madeline Fleury,
Here.
Justice Martin is absent, Archie McKee,
Here.
and we have one vacant slot. Also present are Jeremy Evans, Maria Bourgeois, Russ Kenyon, Pam Halloran, and Mike Crowley.
Thank you. Any changes to the agenda or more to add to the agenda? If not, we'll assume that we're into public comment. Any public comment?
You want a motion to accept the agenda, Jim?
Thank you very much.
I'll
Thank you.
move.
Steve moves. Second,
Second.
Archie.
Yep.
Second, Archie. All in favor, please signify by saying aye.
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 You guys have it. Previous minutes, Maria.
Okay, so approval of the previous minutes from February 9th. We'll need a motion.
Any changes or amendments to the minutes of the meeting of February 9? If not, the chair will assume that there is a motion to accept. Motion, please. Motion to accept minutes.
Archie, you moved.
Yep.
Oh,
Okay, second.
Thanks, Archie.
Steve will second.
Okay,
All in favor, signify by saying aye.
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 Aye. The ayes have it. Bills and communications. None. Committee reports. I think this is going to become a regular feature, and I'll talk more about it a little bit later in the agenda, but we want to make sure that the committees have something that they can work on to the benefit of all of us. It's not make work, but rather good work. So I'm going to ask Steve if he'd make the first committee report from the governance committee. Steve?
Governance committee met to do revisions of the list. It's okay to do this during the IDA. We're doing it right. To make a revision of committee assignments. That the changes were required because of Justice's resignation as chair and also the loss of Mike Doran, who resigned from the board. So I think, should I just read through, Jeremy? Do we have, I'll just read through the changes that we need to vote on today. And we'll put this forth, and we'll do this in open session. The recommendations of the governance committee for chairman, Jim right now is serving as the acting chair because he was voted. So we are recommending that Jim Ellis be made chairman through the end of our terms, which is the end of December, and that Madeline, that Justice, Madeline, sorry, Madeline, that Justice Martin be made vice chairman again through the end of our term 2022. So it's a little bit of a flip because Jim had been vice chair before and Justice had been chairman, so we're changing that around. Justice will become vice chairman. The committees, when we met, we did some edits to the names of two of the committees. We had 1, 2, 3, 4, 5, 6, 7, 8. We had 8 committees. We're down to 7, and I'll explain that. But starting first with our program committees, entrepreneurship, we amended that name, the title, to make it entrepreneurship and agriculture. It had been agriculture. And we're proposing that Madeline Fleury be the chair of that committee, that Sherry Boyer and Justice Martin be the additional 2 members of that committee. The other program committee, Downtown Revitalization. Now we voted to merge the tourism committee with Downtown Revitalization because so much of our tourism actually involves our active downtowns in Malone, Tupper, and Saranac Lake. So the Downtown Revitalization and Tourism Committee, our recommendation is that it be chaired by Archie McKee, and that Sherry Boyer serve on that committee along with me, Steve Ehrman. So we'd have 3 members on that committee. That's Downtown Revitalization and Tourism. The other program committee is Economic Development, which we had listed in January as the Facilities Committee, but we realized talking about our facilities, offices, and industrial parks and all business parks, that's really part of the work of economic development. So we made that the Economic Development Committee, and that would be chaired by me, Steve Ehrman, with the additional 2 members being Madeline Fleury and Archie McKee. And that brings us to programs that are committees that tie more into administration. And starting with the loan committee, which stays the same, Sherry Boyer chairing, Madeline Fleury as a member, and Archie McKee as a member. And our audit and finance committee, which Archie McKee would chair, with the membership being Sherry Boyer and Justice Martin. And our governance committee, which we recommend that Madeline Fleury would chair, and the members would be Justice Martin and Steve Ehrman. And related to the work of the governance committee is the anti-harassment committee, which we anticipate would not meet that often. It would really meet if we had an issue involving alleged harassment. And I would chair that committee, Steve Ehrman, and the other members would be Sherry Boyer and Madeline Fleury. And I think that covers our proposed changes and the slate. So each of the committees is proposed to have 3 members. Some will meet more often than others. We're short 1 member because of Mike Doran's resignation. So when we get a new member, and we don't know when that may happen, but when we get a new member, we'll take another look at the composition of the committees, and we'll add that person in, which could reduce a little less of a workload for us because we'll have an additional person to roll into this construct. So that's the proposed slate. And most important on that is the new chairman being Jim Ellis, and our new vice chairman being Justice Martin. And I look at governance as very important, with Madeline Fleury being the chair of that. Okay.
Now, is Jim not on any committees because he's got a cane, or is he on all the committees?
Well, he operates pretty well, I know, with a cane, but his choice, and he can speak for himself, but his choice is to be a member of any committee that he chooses. And he may choose to be a regular member of some, and he may choose to join others depending on what issues are running through. But we have an issue, and this came up at the governance committee, which was Madeline's catch, which I thought was good.
I thought, good point.
Yeah, that if, since we have 3 members, if we have 4 voting members on any of these committees, we basically have, because of our composition of our total number of members on the of these corporations of being 7, if we have 4 members of a committee, we have a meeting of basically of the agency or corporations which would need to be publicly advertised. So if we're going to meet as committees as we typically do without necessarily having to meet notice requirements and advertising requirements, we need to keep the committee membership at 3. So if Jim joins a committee, he'll join a committee as a non-voting member of those committees, unless we choose, because an issue is running of special importance, if we choose to advertise that meeting and have Jim in as a voting member of a committee. Does that answer that, Archie? Is that?
Yep. Good catch, Madeline.
That was a good one.
I think that was Maria who caught that, not me.
Was it?
Yeah.
Thank you, Maria. My notes were inadequate.
Makes no difference. I think we really have the whole gamut of what we're trying to do here. Everybody does what they do best. And that's what's nice about being associated with a board like this. So you've heard the committee reports. Are there any further questions? If not, I'll entertain a motion that we accept the report of the governance committee, as you just heard with Steve Irwin. Motion?
I'll make the motion.
Motion by Sherry.
I'll second.
Second, Madeline. Any further discussion? If not, the chair will assume the question's been moved. All those in favor, please signify by saying aye.
Aye.
The opposed, nay. The ayes have it.
Maria, you're gonna get us each a list of those committee assignments, right?
I will do that, Archie.
Thank you.
And a question to Madeline or Sherry, or Madeline or Maria, does the vote to accept the committee report constitute a voting for the chairman and the vice chairman and all of the committee
In my
members?
mind, it does, because the full board approved the committee report, which was recommending those changes. So I would say they're one and the same, in my opinion.
Okay, so Jim Ellis is now formally the chair of the Economic Development Corporation and not the acting chair any longer.
Very good.
Good, thank you.
My fellow Americans. No, let's go to the next thing.
Thanks.
Treasurer's report.
We've been obviously knee-deep in working with Mike and Pam on getting the information ready for the audits, but you do have the February report, the March report as of February 28th financial report in the packet. There's nothing really of note, except that we haven't gotten you the profit and loss budget comparison yet. We need to do that. I apologize for that. That's one part of that report that's still missing. So we will make sure that's back in the packet for next month.
Okay. Thank you. Any old or unfinished business to be brought before the board?
We need a motion, Jim, to approve the financials.
Thank you. Motion to accept treasurer's report. Motion?
So moved.
Second.
Archie, second. Sherry?
Mhm.
Or Madeline? I'm not sure what I heard.
There's Sherry.
Okay. Then, any discussion? If not, the chair will assume that there is no need for discussion. We'll go to the vote. All those in favor of the treasurer's report, signify by saying aye.
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 Opposed, nay? Very good. Any other old and unfinished business? If not, I'm assuming, Jeremy, that we can hear our auditors at this point with our resolution.
Yep.
Okay, then we'll call upon our auditors. Thank you very much for being with us today. Go ahead, please.
Thank you. Okay, so we're going to go through the CDC today and the IDA. Which one did you want to start with, Jeremy?
Let's do IDA
IDA,
first.
yeah.
I'm sorry,
IDA.
IDA. Okay. Yep. I just right before the meeting emailed you a copy of the report. Oh, you have it up. Okay, great. So one of the things that changed significantly this year is the layout of the report. So if you'll notice, the auditor's opinion is now on the very first, if you go to page 3, I'm sorry.
It's like executive summary.
Yeah, so we have the opinion first. And this was a standard that was implemented during the year, and the whole idea behind it was they didn't want you to have to dig through the report to see how you did. So in the first paragraph, we were saying that you have an unmodified opinion, and that's the highest opinion that we can give. And then it goes on to the basis for the opinions. It explains what the audit was. It tells you if we obtained reasonable assurance about whether the financials were free from misstatement. We talk about the responsibilities for management and the auditor's responsibilities. And this whole section here, we tell you that we had to exercise professional judgment and maintain skepticism. We had to identify the risks of material misstatement. We always have to understand your internal controls. We have to evaluate your appropriateness of your accounting policies. And then we have to conclude if there's any conditions that would make us nervous about you continuing as a going concern. So that's pretty new this year. We didn't address that in the opinion previously. Then there's a section on required supplementary information. So the IDA is a government, and you're required to do this section that's a management's discussion and analysis, and that is prepared by management, and it's in comparative, and it talks about what's going on and the future. So it's a really good thing to read. It was really interesting. Jeremy, good job on those projects. I understood it a lot better from that. Then there's another report, because you're subject to a Yellow Book report. And in the Yellow Book report, we are looking at our internal controls over financial reporting. So there's another opinion at the end. But your management's discussion and analysis is after the opinion, and Jeremy's scanning right through that right now, or did. And we can keep going down. Just talks about the swings there. It's got a condensed statement of net position, and that's showing you the comparative, because the financial statements are just 1 year presentation. So we get the kind of a look up at the swings during the year. Sorry, there's an echo. I get distracted by it. Okay, and that is a comparison of the operating results. So we did have a decrease in net position of about 30,000. Last year we had a decrease of 341,000. And keeps going. That breaks down your land. And this is the factors on the future, bearing on the future. So some nice little bullets there. So then we keep going. We're going to get to the first statement. And that is the statement of net position. So again, it's the 1 year. So we are looking at our current assets are 944,000 against last year's 908,000. We had non-current assets, which include our land of 1,588,484 against 1,578,003. So that was only an increase of about 10,000. So pretty similar. We did have a sale of 2.5 acres during the year, and that's on your books at what you purchased it at, which was, as Jeremy pointed out, you know, a very low amount because it was purchased years and years ago. So we did break out the land portion of that, and it was about $1,800. So that decreased, and then you have accumulated depreciation. So that's depreciation expense that accumulates. We do have the deferred outflows, which is not really an asset category, but sort of. You want to?
It's an expense that will be recognized in a later period. So just hanging out there, it's deferred.
So that was about 10,000 more than the prior year. And then we get down to our current liabilities. So we did have total current liabilities of about 79,000. Last year they were 30,000. We do have in there some pilot payments that will be remitted. That were remitted in January, so those are held in there. And then there's also some in the receivable portion. Our pension liability share, our share of the ERS pension was $533 this year. And last year it was $152,000. So that's a pretty significant decrease. The deferred inflows of resources is also related to that pension. And that was up 153,000. So those kind of swing together. And then that leaves us with our net position. So we have some unrestricted net position of 842,000. Last year it was 845,000. So that's a decrease of about 3,000. We have our part of our net position is tied up in our fixed assets, and that's net of accumulated depreciation. So that's 644,000, and last year it was 671,000. So that's a decrease of about 27,000. So that is it for that statement. We go on to the next statement. This is showing what happened during the year. So the first statement was how we looked at what we looked like at December 31st, and this one is showing what happened during the year. So we did have charges for services of about 288,000. Last year there was 3,200 in there. And a major part of that is you got your fees for the solar projects. So we had the Bangor and the Salmon River. So you get the 1% of the total estimated cost of that. So that is that's in there. There's also some portion that you're going to remit. So it was due to you. It came in January, and then you remitted it to the taxing jurisdiction. So that portion is in there as well. And then we had a gain on the sale of that property. So you sold it for about 50,000. It was on the books for this 1,800. We did pick up 5,000 in the previous year. There was a deposit. And so that left a total after your expenses of 42,000. Last year, we sold the cleaning warehouse, I believe, and we had a loss of about 91,000. So this year gain, last year loss. And then we get on to our operating expenses. So our salaries and wages are 143,000. That's up only $6,814 from the year before. Our employee benefits decreased 50,000. We had our professional service contracts were up about 23,000. You had a lot of legal in there for those projects, so that was the increase. Your supplies and materials were just about $2,000 lower than they were the year before. And then we have some pilot payments that went out, which were about 70,000. So you take that with what we have in charges for services. And then we had depreciation expense of 26,000 during the year. And then there's some other operating expenses of 25,000. Last year we had 36,000 in that category, so a decrease of about 11,000. So that left us with an operating loss of 73,000 against last year's 445,000. So we do have some non-operating. That 43,240 in there was from the Empire Development Zone. So that was held in the LDC and that transferred over to the IDA. So that's that 43,000. Last year, there was 100,000 subsidy from the LDC. So that left us with a net change in position of about 30,000 decrease. Last year, we did have a decrease of 341,000. So that was higher than last year. So that ended us with our net position at the end of the year of 1.548 million, and last year was 1.5 million. Any questions on that one? And the next statement is a statement of cash flow.
Whoop. Can you hear me?
Yes.
I want to ask dumb questions.
Oh, please. There, no questions are dumb.
Okay, the areas where I noticed significant differences from last year to this year were, and they may be tied together, and that is the operating report 20 versus 21, the pension liabilities 20 versus 21, and the operating profit or loss 2021. I noticed big differences in those numbers. Can you extrapolate a little bit on that?
Well, so your first one was the pension?
No, first one was operating reports. It was on the very beginning.
Oh, under the MD&A? Okay.
Yeah.
All right. So these are condensed. So the statement I just went through broke those out quite a bit more. So your operating revenues, that had those your 1% fees for administering those solar projects in there. So
well, you just went by it. You just went by it.
Yeah.
There it is.
There you go.
Yep, up just a tiny bit. Yeah, there you go. Okay. So in the operating revenues are charges for services. So it had those fees in there, and those, we had two pretty significant portions in there. And then there's also the OIA project. You started collecting for the pilot, the actual tax portion that then is remitted to the town, the county, and village. So you had, or school, I'm sorry, the school. So those are in there as well. So you can see they're in the general revenues and they're also in the operating expense portion. So
we didn't have those in 2020. So,
right.
So
we had just a tiny bit of fee, like application fees, and not very much. And we had some rental income there.
and we had a huge loss on last year on the gleaning warehouse that we sold. So that was
Right.
90,000.
That 90,000 there.
And this year we had a gain of 42,000 on the land that was sold. So that's quite a large swing right there.
Exactly.
Does that help?
Yep.
Okay.
Yep.
So your next question was the pension one. So
Pension liabilities.
yep. So we're the agency is a member of the employees retirement system. So a few years ago, GASB 68 came out where we recognize our little chunk of what's going on with the entire employees retirement system. So that swings from year to year, depending on the results of the market. So if the market's up, and it was up at December 31st, the pension system was almost 100% funded. So your share of the liability was only like $1,000 in this year, where last year it was like $100,000. So it becomes very prone to market conditions, and also the actuaries, if they should change something. So in the they came out with new mortality tables that decreased or lengthened the time people live So that decreases kind of the liability. So that you start to see those fluctuations in the deferred outflows and the deferred inflows and the liability. So there's nothing we can do. We're just a small part of that whole system. But what's encouraging is in New York State, the system is almost 100% funded. The reason for GASB 68 was to point out to all members of or across the whole nation what the status of the funding was on these retirement systems. So there's a lot of states who are 50% funded or even less. So it's important to point that out to the public.
And there's a note later on in the financials that lays that out and shows you the total liability for the system and then your portion of that. So we'll get to that when we get to the notes part. We can take a look at that.
Yeah, one other question.
One other question.
What was the last one?
Operating profit or loss.
Yeah, again, that goes back to that first thing that Pam covered. So yeah, big swings in the 2 years that caused you to last year have a large loss, this year to have a much smaller loss.
That's right.
Okay, I'm supposed to be the treasurer of this outfit, and who provides you from our organization with the data to complete your audit? Is it Jeremy?
It's yeah, Maria has keeps the QuickBooks, but Jeremy and Maria both gave us a lot of stuff.
Okay.
It was all done remotely, so there was a lot of uploading and scanning and a lot of questions back and forth. But you keep your books in a program called QuickBooks, and that's what you're getting your monthly data from as well. So we get a backup of that, so we can go back in time and get to the reports and get to a lot of numbers that we can use and not have to bug use as much, because it would be a lot more. But because we're able to get that backup, we restore it. It's never live in our hands. So we do that. We have a program, we put your numbers in, we do our adjustments to it. We provide you with the adjustments so that we're all on the same page.
Okay, thank you.
You're welcome. I think we were up to cash flow, Jeremy.
Oh, good, keep it over there.
I think we went too far. There you go.
Yeah, we could skip the cash flow. It's
Right.
mainly just a reconciliation,
Right.
so it just shows you what happened between the 2 years, between the
Right.
cash at the beginning of the year and cash at the end.
You had a net increase of $8,629 in the cash, and that just reconciles the bottom to the top there. Only auditors like cash flow statements
Bankers.
and bankers. If we get into now the notes. So note 1 is always our summary of significant accounting policies. It talks about the organization, your accounting method. It gives you the explanation there towards the bottom of what constitutes our net position. So we have unrestricted, restricted, and net position that's tied up in your capital assets. So the next page is your capitalization policies. So anything over 2,500, you capitalize, and that shows how many years. Cash and investments, you talk about your policies. You were fully collateralized at the end of the year, so we do look at that. We don't consider to have any bad debts, and you don't have to write off any receivables. Compensated absences were about 24,000 in the year. They were up a little from previous, I think last year they were about 18. We talk about revenue recognition. And then your pilot paragraph, we do talk about the new projects that you have in there. So you do get to recognize that percent of the total cost, and it's recognized in the year that it closes. So, and then we go on and we talk about the other entities. So you did have a name change at the end of the year. And well, we talk about that a little bit down further. And this one had the Empire Development Corporation. Then we go on to our just standard notes that are in there. We had revolving funds in 2002. That's how it all started. The deferred outflows and inflows of resources, that shows you netted together. Overall, it was a $23,000 difference. The outflows are sort of like assets. The inflows are sort of like liabilities. So,
And it's related to the pension.
it is related to the pension. Yep. So then the related parties, we talk about the LDC, and I kind of referred to it here as the EDC and the LDC, covering both, because in December, I think that legal name change came through. Note 3 talks about it shows you the capital asset balances. So you can see the different classifications there. So we had retirement of land of, I guess it was $1,736. So that means it was sold. And then we have our depreciation of $25,000. So that increases. We did realize a gain of $42,000 during the year on that sale. So that's a good thing. Then note 4, here's where we get into the retirement plan. It explains what the plan is. It has your contributions for this year and the past 2 years. Everyone was on the same tier on this. We did have a liability of $533 for this. If you scroll down a tiny bit more, oh, I guess to the next page. Projection, looks like a sentence cut off. I have to go look at that. So our proportion, that gives you the proportion this year, was down 3.000376% from the previous year. And this shows you your deferred outflows and inflows of resources, and it shows what happened in the deferred outflows to the deferred inflows, and whether it was a change in assumption. And this is a different makeup every year. You did make contributions subsequent to the measurement date. The measurement date was 3/31/21. So you made or 3/31/21.
Correct.
Okay, and then you made contributions after that.
We probably made a contribution in December.
Mm-hmm. We did. And if you go to the next page, that shows the assumptions there. So this, we're looking at 5.9 this year. I think it was 6.8 last year. So that was decreased. The inflation rate was 2.7. The year before, I believe it was 2.5. And those mortality tables changed. So I believe we had MP 18 previously.
Remember.
This gives you the long-term expected rate of return, and it's assuming an inflation rate of 2%. And those are the target allocations and the expected rate of return. So it gives you a lot on what those are made up of, those investments. And we scroll to the next page. Here, this shows you the sensitivity. So the current assumption is 5.9%. If it was 1% lower, you can see what a much larger liability that would be, 148,000. And if it was a 1% lower, it would actually be an asset of 135,000. And then that big gigunda number underneath that is the total system, the very large number with a lot of zeros, and then your agency portion. So, and it is 99.95% funded. So as Mike pointed out, then we go on to commitments and contingencies. This is where our COVID notes falling into. Last year it was in subsequent events, and now it's in our economic uncertainty, because we're just saying we don't know. We don't know what's going to happen. You do have an operating lease for the building, and you've been renewing at 1-year terms. So your rent is $1 annually, and then you have fees of $200 per month for cleaning, maintenance, and trash removal. And then we look at subsequent events. So this was anything that happened at the end of the fiscal year to the date of the report, which is yesterday. These are definitely hot off the presses. And we look to see if you had anything going on there, we would note that in that event note. And then we get into some schedules that are required because of this pension. So this shows you the portion of the liability and the share. So this schedule will be 10 years, but it started in 2015. So in 2025, you'll have a full schedule, and then numbers will start dropping off.
And you can see at the bottom there, how the pension has been funded. So it started out at 97 or 98%, and now it's close to 100%. So it does swing from year to year.
Yeah. And we can go to the next schedule, and that is showing the employer contributions. So you can see the difference there and the percentage of the payroll. Okay, then we get into that last final report, and that is our report on internal controls over financial reporting. And here we look at your internal controls, and then we look to see if there's any deficiencies in internal control, which would mean employees or management in the normal course of performing their assigned functions to prevent and detect correct misstatements on a timely basis. So we look to see if there's any material weaknesses, which would mean your financial statements may be materially misstated if things hadn't been caught, or and then we look at significant deficiencies as well. And we also look at a combination of those to see if they raise to the level of being material. So significant deficiency just means we needed to bring it to your attention. It was worthy of your attention. And then we have a report on compliance. So we look at your compliance with laws, grants, regulations, and, for example, the meeting that would have potentially been an instance of non-compliance if you had not followed the right mix there. So that was a really good catch, Maria. Very good. And this report is also limited to those to you. The purpose of the report is just for our purpose of our testing of internal controls and compliance, and not to provide an opinion on that. So we actually don't give you an opinion there, but what we would do is let you know if there was anything significant or material in performing the audit that warranted your attention.
So there were no findings or notations?
No, not in the IDA, no.
Great job.
Very good job.
Good job. Management and the people in the agency, they did a great job.
Excellent job. And it's difficult with distance. So hopefully next year we'll all be back to normal. Or during this year. Any questions on that one?
We'll jump right in.
Okay, we go on to the CDC, or did you need to do your motion?
You want to do a motion for the IDA audit?
Can we do both? Do we need to?
Yeah.
I mean, separately.
Well, we can do the motion just because we're in the discussion.
Then, based on, first of all, I'd like to say, as usual, very thorough, very professional. Thank you. We're glad we have you as our auditors, and glad we got a backup here with Archie. Archie was in the auditing business for a number of years, so it's good to be able to put it together. So, with that, we'll accept a motion to accept the auditor's report as just given by our auditors. Archie, I'll ask you if you want to make that motion.
I'll make the motion.
Motion
Thank
by
you.
Archie. Second? Sherry?
I'll second.
Good.
Any discussion? If not, the chair will assume the motion has been moved. All those in favor of accepting the auditor's report for this portion, please signify by saying aye.
Aye.
And I'll ask Maria, do we have to do a roll call on this, Maria?
I don't think it's necessary, but it's up to you.
Well, let's do a roll call.
You got it.
Yeah, it's always good.
Okay, so this is to accept Resolution 2022-03, accepting the 2021 audit and annual report. Jerry Boye,
Yes.
James Ellis,
Yes,
Stephen Erman,
Yes.
Madeline Flurry,
Yes,
Justice Martin is absent, Archie McKee,
Yes.
motion adopted, or resolution adopted, sorry.
thank you.
So we have one other
Resolution and a motion.
IDA. And then what we could do is just end the IDA meeting and again, CDC.
Make motion to accept the resolution.
What do you want to do about that? Do we have one?
Okay.
Something like,
Do it and then run the IDA meeting.
Okay,
Yeah, it'll take
fine.
just a couple minutes.
I guess I know where it was. Always,
Employee compensation, right?
Yeah.
Mhm.
Resolution 4.
Resolution 2022-04, employee compensation. Jeremy?
This is a resolution adjusting Maria's salary retroactive to January 1st.
Is there anyone who would care to make that motion?
I will make the motion to accept the resolution.
Sherry makes the motion.
Steve will second.
Steve seconds. Any discussion? If not, we'll do a roll call vote.
Okay, this is for Resolution 2022-04, employee compensation. Sherry Boye,
Yes, and I will add, thank you, Maria, for everything. You do a wonderful job and well-deserved.
thank you. James Ellis,
Yes, and the same comments as Sherry, but I always enjoy our conversations. Thank you, Maria.
Steve Erman,
Yes, with a ditto to the previous two comments.
Look what I said.
Madeline Flurry,
yes, and thank you, Maria.
Archie McKee,
Yes, and whatever Sherry said.
Justice Martin is absent. Resolution is adopted. Thank you all.
Thank you.
Thank you.
Very good. So we'll accept the motion to adjourn this portion of the meeting. All those in favor signify by saying aye.
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 Aye.